Hey everyone, this is Ryan Mallory for SharePointer.com. Today is December 19th, 2014, and what a week, man. The last 3 days have been good in counting today, of course, and the first 2 days of the week were like completely polar opposites. So, I talk a lot about to members of the Splash Zone and in my writings in general, that being flexible and nimble in uncertain markets is hugely important. So we come into the week, we're short JP Morgan, JPM, Teva Pharmaceuticals, TEVA, General Motors, GM, and I think we had SDS as a short as well. And I think we ended up making like 3.7% or so on that trade. And then all of a sudden, we started covering those short positions on Tuesday because you got this insanely crazy spike. I'll pull it up here on the 30-minute chart because that's the one that shows it the best. So we opened down right on Tuesday, and it looked like things were going to get pretty nasty. And then you had this just ripping short squeeze. And that short squeeze is what took me out of pretty much all my short positions except for TEVA and JPM, which I still held on to because the trade setups were still valid. And I don't believe in just getting, I have before in the past, for better or worse at times, but I don't believe in doing fire sales per se. I believe in getting out, in increments out of positions. So if the market was rising, we got out at SDS and a couple of other trades. And this thing was just shooting through the roof early on. And, that was just a clear short squeeze right here. And then later on in the day, all of a sudden we peak out, and then the bears just like brought the hammer down. So at one point on Tuesday, you have a market that gaps down like 20 points, then it rallies like 40 something points, and then it drops another 40 points. So really the people who got hammered that day basically were the people who were in the market, because when it gap down, there was probably a lot of short or a lot of longs that were trying to time the bottom that got knocked out of their positions because their stops triggered, and then the market goes on this rip and rally. So then they're left, they're frustrated, they're chasing after this market, saying, "Well, man, maybe I shouldn't have been stopped out." So then they get back in, and then they all of a sudden the market tops back out, and it drops another 40 points. So there was trader anguish probably all across the board. On Tuesday, day traders probably were able to be nimble enough to go with the ebbs and flows, but I'm sure even as day traders, that was a difficult market to trade. Nobody goes into a trading day, even in the worst of markets, thinking that we're going to gap down 20, rise 40, drop another 40 plus into the close. It just doesn't happen like that. Well, on that day, I bought into UPRO. Actually, at first I did SSO, and I got stopped out of that fairly quickly here. I think I got in probably around this little green bar right here, and then we just dropped into the close. I got stopped out of SSO, but then I got into UPRO, which is a 3x ultra of the S&P 500, which is pretty much the only 3x that I really want to play, because I study the S&P 500 just every day, all day long. So I'm familiar with it. And even though it's 3x, it's not like you're going into a TNA or a TZA where just the moves are even wild, or some of these like 3x semiconductor or whatever it is, or like a TVIX or UVXY. It's nothing like that. it still has volatility because it's giving you 3 times the returns of the S&P 500, but it's easier to scale to manage the risk of. So we got into UPRO literally like minutes before the close on Tuesday, and I'm sure some of the members were scratching their heads on that. Why I got in at 117.28, and there were signs in the market, particularly when you like overlap the S&P 500 with some Bollinger Bands, which I'm not going to do right now because I got a lot to get through in this Google Hangout. But we ended up getting in, and of course the rest is pretty much history. We got in at 117.28, and now we're sitting at 134.58, which has been I'm very thankful for it. It went from 117 to 134. We're sitting at about 15% in gains so far on the trade. I'm not probably going to trade at all. Essentially what I'm going to do going forward is manage this thing according to the 5-day moving average. So if we end up closing below the 5-day moving average, that would probably be a good sign for me to go ahead and get out of UPRO. So I don't expect that to happen today or even on Monday per se, but at some point the 5-day moving average will catch up with UPRO and trade much closer to the price action. But we got in, I think I had a stop loss at like 114.50. So when I talk about risk and reward, this is a perfect example because we were basically risking less than $3 on the trade. And so far we have made almost basically about like $17 per share on this trade. So you risk $2.75, you make about 17. That's really good. That's like a 7-to-1 risk reward. So that's how you succeed in Wall Street. That's how you succeed in trading, is that you have to keep the risk tight. And yeah, maybe sometimes you go through dry spells and you're going to get knocked out of a position again and again and again. But then you continue to play the risk. And I always tell this to traders. I say you watch the risk, you manage the risk, and the profits will take care of themselves. And that's what trading is all about. It's about managing the risk. But see, what happens is that traders in general, especially the services out there, man, they sell you a pipe dream. They're sitting in exotic locations, driving exotic cars with exotic women, and they sell you on the pipe dream that they know, and you should know too, that's not gonna happen. Okay, trading successfully takes blood, sweat, and tears. There's no boom. There's no booyah. There's none of that stuff. It is rigorous. It can be frustrating at times, and it can take you from the lows of your personality and emotions to the highs. And so, and what you have to do to be successful at is to be able to manage all of that stuff. Nobody's throwing cash up in the air when there's a successful trade. Women aren't just coming out of the doors and throwing themselves at you. New cars are not showing up at your door. Okay, it is very, very difficult to succeed trading on Wall Street or trading the stock market. And the only way you can succeed is by managing the risk. And it's the most boring part of it. Okay, nobody wants to talk about the risk. When somebody comes up to me at a cocktail party and they say, "Hey, what do you think about buying oil at this point?" Or, "Hey, what do you think about buying this penny stock?" Or something like. First of all, if it's a penny stock, I won't even talk to them about it because that's total garbage, anyways. But they'll ask me about it, but they only want to hear about how high can it go. Well, personally, I don't know how high it can go. I don't know how high any stock can go. All I can tell you is how far I'm not willing to let it go against me, and that's how I'm going to trade. Now, so when I look at my charts, I'm looking at trade setups that give me ideal risk reward trade opportunities where it gives me an edge to the upside. Now, of course, I don't know how high a stock's going to go. If you would have asked me on UPRO on Tuesday that it would be trading at 134 from the 117 that we bought into it, I probably would have banked on that not happening. Okay, I would have said, you know what, I have expectations that if it can get up to 125, I'm going to be thrilled. Okay, but 134, yeah, that's probably pushing it. Okay, I'm not buying into UPRO because I think we're going to have the biggest rally in 2 days that we have seen in years. No, I bought it because it has a good risk reward setup, and I'm going to let the profits take care of themselves. And that's exactly what it did here. So as we go in to next week, this is coming up. We're coming up now on the time. We hear all about the Santa Claus rally. I titled this Google Hangout called "Santa Claus is coming to ... Wall Street." Okay, it's supposed to be coming to town. I changed it a little bit. But in any case, though, so next week is when the Santa Claus rally is historically takes place. It's like the last 5 days of the trading year and the first 2 days of the new year. So how is the market done? Last year it was really just a moot point. The S&P 500 finished up like 0.2 points. The year before that, it finished up 2%. The year before that, it was 1.9%, followed by 1.1, 1.4. And then in 2008, it had a whopper of 7.4. Now, what they'll also say, too, is that when the market doesn't go rallying on that last week, it's oftentimes a signal that the market's going to have a difficult year ahead. So the last time we didn't have a Santa Claus rally was 2007. And what did it do that week, the Santa Claus rally week? It finished 2.5% down on the week that the Santa Claus rally was supposed to happen. So I think going into next week, unless we're looking at a pretty rough year ahead, which I don't know if we will or not, I would be willing to bank that we're probably going to steadily progress higher next week. Now, do I think we're going to shoot up 88 points or 89 points like we did yesterday and the day before? No. But I think that there could still be a steady progression. We're basically open full days on Monday and Tuesday, and I think Wednesday, which is Christmas Eve, is a half day, and then Christmas is obviously closed, and then Friday's a full day. Double check me on that. I'm pretty sure that's the schedule. So the other thing out there right now that's, you know, catching the attention of a lot of traders is oil, okay? And I'm telling you, man, I've just been mesmerized by the oil chart. I tried it yesterday. I'm a little bit sketchy unless I have some profits to cushion myself with about holding USO overnight. I'm longing it right now. The trade's really not going according to plan. You could say I sort of got into the top of it today. Let's see, the high of it was like 21.63. I got in at like 21.56 right now. So I'm like down 0.5%. If it can't pull itself together, there's a good chance that I'm going to, for the second day straight, say, you know what, no mas. I'm moving on to it. And I'm not going to hold it over the weekend. So it really needs to improve itself here in these in the last, what is it, hour and a half of trading. We need to see a little bit of a rally come on with USO, and I think it's there. I do think that there's a good rally potential here. I mean, you look at this 30-minute chart here on the bottom left-hand corner, you can see there's like this double bottom that looks really nice. The problem with that, and this is what makes me a little bit nervous about holding it overnight. Now, given we're probably a lot closer to the bottom at this point than we have been at any other point, because all we've done is just gone straight down on USO. But you look at it when it's tried to form bases in the past, like right here, if you just ignore all this other action, it looks like it's breaking out. It's breaking out, and this was in November, and I would have said, okay, USO is setting up for a push higher back into the 30s. But nope, it dropped, and that was that infamous day after Thanksgiving where oil just went into the crapper. Let's see here. You have it here too, where you have a little bit of a base forming, maybe like an ascending triangle pattern here. And all it did right there is it basically turned into a bear flag and continued to downward move. So yeah, it's a little bit unsettling here how, you know, there's been a lot of bases that simply won't play out favorably here. So we'll have to see how this thing goes according for us in the days ahead. So, but yeah, if it can't pull itself together at the end of the day, I'm probably going to be out of that trade. Oil, man, it's not the easiest trade to say the least, but it's setting up nicely. And I'm telling you, when USO finally does decide to rally, and yeah, it's up 3.6% today, but that's not the rally I'm talking about. Oil at some point is going to see a monstrous short squeeze, because you look at this thing and the one thing that you see is every time there's a pop, there's another round of shorting on this stock. And what I've seen over the last few days is that those shorts are not able to actually push it to new lows, but they are able to erase any kind of current gains that it might have on the table. Today's a little bit different though, because we're actually up, you know, about 3%, not a lot considering how much it's dropped, but it's showing signs that the bears are unable to really push it down today. So I'm really curious about what it does in the final hour of trading here to see if it can pull itself together and maybe get above this, some moving averages here. I mean, if it could get above that 20 or that 10-day moving average, that would be huge. Now it is above the 5-day moving average. That's important too. It's done that in the past and it's not been able to hold it, but anytime it can do that, still it's progress being made. Now we're in one other oil stock, and obviously it's done a lot better, SLB. It's we got in on that at 82.77. When I say we, I say members of the Splash Zone, because they receive all my alerts, and they're either automating it through like a Ditto trade, or they're pulling the trigger themselves because they receive it in the chat room, the text or the alerts they receive in the chat room, and they also receive it via text and email. So you get to hear from me plenty throughout the day. In various formats. But SLB, it's done really well. We got into this once again. We got onto it on Tuesday afternoon at at first it really did not do any good because it had this long wick and it just retracted all that. But then the days that followed, it did really well for us so far. So I'm definitely holding this one over the weekend. It's continuing to do well, and it's given me a little bit of a cushion to try to see if we can get something out of USO, which so far, we're about break even on the trade now. So it's come up a little bit since I've started this Google Hangout. Another trade we got into yesterday, Facebook, and this one's doing really good. Facebook has been really difficult to trade this year because you look, especially like the second half of the year, because when you go back to like July, it's just been a chop fest. But now we're starting to get a little bit of movement out of it, and things could actually start dramatically improving as we go into the new year. You got a move from 75 to almost $80 now. We got in at 77.98, so up about 2.3% on it right now, but it pulled out of this base, and that's what sort of got me going on this stock. I mean, I loved how it pulled out of it yesterday. I got long on it in the afternoon, and since then it's just been steadily progressing higher. So let's look at some of the big names out there. It's a mixed bag of really. Apple, down today. I mean, Yahoo's down too, which we have a position in. But Apple is not quite bouncing today. But I mean, you do have to be a little bit realistic that even though the market might be up currently 7.5 points on the day, there's a lot of stocks that are going to be taking a breather. Apple went from 106 all the way up to like 113 or so. So yeah, don't be surprised if something like Apple is taking a little bit of a rest today. But I mean, I think the stock still sets up good to go back up towards 120. So there's about 6 to 7% upside there, and maybe it can get through that 120 level this time. Tesla is just continuing to just get beat down by the market. It's still a very bearish stock. You have a head and shoulders pattern here, and you can see as I'm outlining it with my arrows that's the head and that's the head and the shoulders pattern. You got the neckline right here, and it's broken through it. Now, obviously, we've had a good bounce out of it the last couple of days, but with that weakness in oil, see, and I think it's a bad assumption that the street's making. And right now, as we're talking, USO is finally starting to move a little bit. So we're up 0.2%. Woohoo! No, we need a little bit more than 0.2% out of oil, but overall on the day, oil is doing really nicely. It's up like 4%. We're just a little bit late to the party. Tesla, on the other hand, though, so with the huge sell-off in oil, a lot of people are thinking, well, because Tesla is an energy efficient car, people are not going to want to buy Tesla because of the huge decline in oil. And I think that's pretty stupid, because a lot of times people who buy energy efficient cars, they're buying them because they're going to be able to save money or whatever, but the thing is, or they're doing it because of a cause. They hate oil and they want to save the environment. But see, Tesla is a little bit different. People buy Tesla because they are doing it for the status symbol, sort of like the reason why people buy BMWs and Mercedes and those kinds of cars, or Lamborghinis and Porsches. Okay, Tesla is a status symbol. Okay, you get to go to parties and say, hey, you want to go see my Tesla outside? And people are going like, yeah, definitely. I've never seen one of those before. And so people go outside and they want to check them out. I've never even seen a Tesla before. I've just seen their stock. That's all that's the closest thing I've gotten to a Tesla vehicle. So Tesla's getting beaten down because they think, well, if oil is going down, no one's going to want to buy a Tesla. People are going to buy a Tesla because they want to buy it and because it's the thing that people were talking about. So I think the decline in Tesla is sort of stupid, quite honestly. Now you got some others like Google. Google's been in a bearish trend going back for this entire second half of the year here. I like the bounce over the last 2 days, but guess what? It's not really out of the woods, though. I mean, if it really wants to make some improvements, it needs to go about another $20 higher, clear 534, where there's definitely some clear resistance at. Between 530 and 534 is where you got resistance. So if it can clear that level, that little area right there, then you want to see if there's like a setup that can emerge out of Google and then take that trade setup. Then the last two stocks I'll go over, GoPro. I wouldn't touch this thing. I wouldn't touch anything right now from a short standpoint because the market's just in this insane rally mode. How long it lasts, nobody knows. But you definitely don't want to jump in front of the freight train while it's going. And this is a big freight train that the bulls are riding right now. But yeah, I mean, it's definitely bearish. It's still continuing to decline. Just from, I think it's an overhyped stock personally. I think it'll come back at some point, but I wouldn't be buying here. I'd personally probably wait for it to get back down to 40, create a base, and then trade out of that base. Starbucks, this stock here, it shows a lot of potential, believe it or not. I know it's broken out and it's come back down and it looks like it's bad, but look at this base, okay? It has a huge level of support here going all the way back to late last year. Now, the last 2 days, it's been testing that support level and it's been holding it. So from a long standpoint, you know, I'm not wanting to get out of it quite yet. It's not behaving like it should be, but if it breaks below the support level, then that's probably a good reason to get out of it. But until then, it's a trade that's worth keeping around. And then finally, we'll do BABA, BABA. It's actually not too bad looking. It's trying to come out of this bull flag pattern per se. And then you could probably put a stop loss below the lows of Wednesday at like 106.28, 106.26 maybe for your stop loss. And you really don't have a bad risk reward trade set up there, and you could take it long from here. So I mean, there's a potential for it to hit 120 in the weeks ahead. You know, especially if we can get that Santa Claus rally on our side. And that's going to do it for today. You know what? Let's go ahead and one more time. Let's look at the NASDAQ, because we didn't talk about that at all. You can see here, it's similar to the S&P 500. It's looking to make new highs again, possibly all-time highs, you know, early next year. So we'll have to keep an eye out on that, because there's a part of me that thought we would never see those highs in the NASDAQ in my lifetime again. But you know what? The market always has a surprise for us. The Russell, this is pretty interesting here. You got a mammoth inverse head and shoulders pattern on this Russell here. And the right shoulder is a little bit deformed, but right shoulders usually are deformed on all head and shoulders patterns or inverse head and shoulders patterns. But it's breaking above that neckline. And that's huge. That means there's a good chance we're going to see a push up to like 1209 and maybe get out of this little trading range that it's been stuck in for, I don't know for how long we've been, basically since February of this year. Actually, you could go back. We've been stuck in this thing since late last year. And finally, there's a sliver of hope that Russell might be finally breaking out to the upside, because the small caps haven't been that great as a whole this year. So that's going to do it for today. I hope you guys all have a great weekend. If you're interested in trading with me, go to shareplanner.com/splash zone. Once again, shareplanner.com. Then you got the /, and then you type in splash zone, and then you can sign up. I mean, you'll get access to my chat room, which I'm in all day long, providing trade setups, trade alerts, answering questions. Feel free to always ask me questions in there. I'm always there to answer them. If you have any questions, you can email me, ryan@shareplanner.com. Or if you're a member of the Splash Zone already, just ask them in the chat room. I'd be glad to address them there. That's going to be it. You all once again have a great weekend. Get in the Christmas spirit and enjoy the holidays, and may God bless you all.